Hey there, this is Casey Lau, Strategic Mortgage Solutions, here for the Tuesday Mortgage Talk. Hey, I found this really cool tool about 2 Mondays ago, and it's something that's offered by Optimum Blue. It's sort of an index, if you will, of different mortgages that they track between, well, essentially, as they say, it's about 1/3 of all the mortgage transactions that close nationwide. And what they're tracking is the calculations for what the rate that was locked, rates locked for consumers for all these different mortgages that they track. They track quite a few if it's 1/3 of all the mortgage transactions nationwide. And what's really neat about this is that they can index and show on average what sort of rates they locked into for different loans. For instance, you can take a look here and track what the conventional loans are doing separately, or jumbo loans, or VA loans. But what I particularly like to follow a lot of times are a lot of these government insured mortgages, in particular because I see in that area that there can be a very dramatic difference between one lender and another lender. Um, and I'm not sure exactly the reason why for it. I can guess at it, but the cool thing is I find it's a neat tool. If you're a realtor or you're a borrower considering the idea of buying a home or refinancing, this is a really neat tool for you. And ultimately, I'm just showing this and sharing this as for educational purposes, because if I was a borrower or if I was a realtor, I would also love this tool as much as I do. For me, the reason why I love it is because I can see what across the nation, on average, are the different loans locked and at what rates. FHA, it's said here that that rate's being on average locked back in February 3rd at 3.834%, VA 3.416%, and USDA 3.674%. And I can compare, and then though I don't know what kind of fees those lenders are charging, I'm assuming that they have to charge fees, but who knows? Maybe some do, maybe some don't. But what I do know is that when I compare the rates that are on average being locked to what we're averaging, you can see in the top right corner of this video, at VA loans, 2.75%, as compared to the average at 3.416. FHA, 2.75, as compared to the average at 3.834%. USDA, we're advertising 3% today, and yesterday's average locks were at 3.674%. Now, I know interest rates, in fact, haven't risen that dramatically, but this gives me a tool to be able to compare how our company is comparing to the marketplace. How competitive are we? I can tell you, and it looks like here that in several of these different loans, we're approaching to where we're seeing rates that are over 0.5% better than what on average we're seeing locked across the nation. I think that's pretty awesome. If I was a realtor, I'd love to be able to have this tool to be able to hand to my clients, so that way when they're handing out one or ideally two cards, if not three, that they also give them a link to this tool, so that way they can reflect at, hey, don't just call one mortgage company, call two at least, if not three. And here's why. You might find that interest rates are currently averaging X over here for your type of loan. Compare that versus what you're getting offered over here. Are you getting a fair deal to what the average is? And are some of these lenders offering a higher rate yet still? Or are they offering a rate that is below the national average as measured by an index like this? This might give both the realtor and their borrower, their client, a great insight as to whether or not they're working with the right lender. Not just that the lender calls them back and does a great job of educating them, but also a lender that can give them what they feel like is the most competitive rates and fees. You'd be amazed how big of a difference you'll find out there with different lending institutions. One lender over here will offer a rate that's 3/4 of a point higher than a lender over here. And I can't necessarily say exactly why that is, but oftentimes I just attenuate to the fact that one lender needs to make more money off of their client because they have higher overhead. But I don't know. But what I do know is that when I compare what we offer here at our company for purchase mortgages and oftentimes for our clients on refinances, we're obviously in many cases beating the market and showing our clients an opportunity to be able to have a higher purchasing power and lower fees. And it's just because they're able to shop and compare. So I've included a link in this video, but if you have any questions on how to utilize this tool, how to exemplify to your clients, or if you are a prospective home buyer or somebody looking to refinance their house and have questions about what kind of rates or fees we could offer, how to compare it to this index, let me know. We'd be glad to help you. This is Casey with Strategic Mortgage Solutions. Have a great day.